What just happened is a really big deal, and it's also very urgent. And so urgent enough that I decided I couldn't wait till tomorrow. I had to record it here in the middle of the night. It's very surprising to me the speed at which this is happening and the speed at which the world is changing. This is far sooner than I thought it would be, and I think the significance is really lost on people because what just happened could easily send Bitcoin to $1 million, $5 million, $10 million. I don't know how quickly or how high, but I do know that the timeline of adoption probably just sped up significantly, even faster than I thought just earlier today. It's truly amazing. So, what happened? What happened today? Well, this is what happened. Some comments made by a major presidential candidate, by Kennedy. He made two new policy statements of what he wants to do for Bitcoin. He released a video detailing both of these. The first one is that he wants to back the US dollar with Bitcoin. And second is that he wants to eliminate capital gains on Bitcoin. And both of these are major deals. So I'm going to break down in this video what exactly that would look like and the game theory that just got kicked up here, because I think many people are missing that. So let's get into it without further ado. Um, I think for context, we have to talk about the last couple of years and what's happened. I remember in 2020, 2019, when I was learning about Bitcoin, and people were talking about how eventually companies would adopt it and nation states would adopt it and ETFs would be filed and eventually pass and everything. And in 2019, 2020, pretty much all of that was a pipe dream. Pretty much none of that existed. Bitcoin had tests before. It had the block size wars. It had other attempts to ban it, but really there was no major catalyst like that had occurred. China in 2021 banned Bitcoin, so it was the first time, or at least the largest time, the largest ban against Bitcoin, and it survived that in a matter of months. Hash rate climbed back up to an all-time high. So that was a major moment for Bitcoin. And then a major moment for companies adopting it was Michael Saylor, obviously very famously in 2020 adopted Bitcoin. And since then, we've only seen more institutional adoption. Now, here in the summer of 2023, BlackRock has filed for Bitcoin ETF. Fidelity has filed for a Bitcoin ETF. ARK Invest is predicting a $1.5 million Bitcoin by 2030. Invesco is predicting, or Invesco is trying to get an ETF for Bitcoin. Just a couple weeks ago here in June of 2023, when I made this tweet here, Michael Saylor bought another I don't remember exactly how many coins, but he bought just over 2/3% of all the remaining Bitcoin on exchanges, in addition to all the other Bitcoins he owns. And when I posted this tweet here on June 29th, this was when North Carolina had a bill pass their House of Representatives to have a study into Bitcoin, of adding Bitcoin to North Carolina's balance sheet of their treasury. And I thought that was a big deal. This is probably going to be looked back as the story of the summer for Bitcoin. But in reality, this got dwarfed by Kennedy's announcement of wanting to back the dollar by Bitcoin. And it's amazing. It's amazing how quick that has occurred. And in the same way that the speed at which Michael Saylor adopted Bitcoin was astounding to me and shocking. I mean, keep in mind, Michael Saylor for years had thought Bitcoin was doomed and was not going to survive and was useless to one degree or another. And then they adopted a Bitcoin standard in August of 2020, and pretty much immediately they were selling as much stock as they could, raising as much money as they could, and converting as much as their balance sheet as they could, as fast as they possibly can, to buying Bitcoin and never looking back. And they continue to buy. In the same way, El Salvador took me by surprise at the speed of which El Salvador adopted Bitcoin. I think I might get this wrong, but it's more or less, I believe, more El Salvadorians adopted Bitcoin in the first 20 weeks than the IMF had rolled out bank accounts for them. So the speed at which people in El Salvador were adopting Bitcoin was amazing to me. And the conviction of Bukele, the conviction of the El Salvadorian government in adopting Bitcoin was astounding to me. And then with these ETFs filing on top of each other, back after back after back, this summer has been amazing. The North Carolina thing is amazing. And this Kennedy thing, again, I want to emphasize, I think takes a cake. This is a much bigger deal than all these other things. Granted, he's just a presidential candidate. Granted, even if he became president, he may not pass us. He may not keep his word. Obviously, he's just a politician. There are things I disagree with Kennedy on, which might surprise people. But there are a lot of things I disagree with Kennedy on. But this is a big deal. And regardless whether it's Kennedy today or another politician in the future, I believe this is inevitable game theory. I'm just surprised he came out this early and stated this goal. So yeah, I think it has to be said. So what exactly did he propose? Well, he proposed, like I said, two things. He proposed backing US dollar Bitcoin. He proposed eliminating capital gains for Bitcoin. And what he specifically said is considering taking 1% of treasuries, US treasuries, and using Bitcoin to back those. Now, why is he doing this? Why would he be doing this as a politician? Why is this politically advantageous to him? Well, that comes down to a simple reality, is that we are unsustainable. The United States is on an unsustainable track, along with much of the rest of the world for that matter. But just for context of the kind of dire situation we are in, fiscally speaking here, 98% of nations that have ever surpassed a 100 to 30% debt to GDP ratio in the last quarter of a millennia eventually defaulted. Some of them with a straight out default, some of them with a real default, some of the nominal default, some in terms of war, debt restructuring. There are many ways in which they defaulted, but 98% of the nations that have crossed this threshold defaulted. And the United States in 2020, we hit 134%. And we are projecting over 700% before the end of the century, according to the Treasury Department. And so ultimately, that's why he cares about this as a political candidate, because he believes that using Bitcoin, he can add strength to the dollar. If we back the dollar with gold, with Bitcoin, or with other hard assets, we can defend the strength of the dollar in comparison to other fiat currencies. If you have fiat currency by one government, fiat currency by another government, and one of them is backed by a mixed basket of hard assets, well, investors and economies may prefer that one currency over the other. So that's the incentive for him to do that, or at least that's the claim incentive for him, and that makes perfect sense. And that's why it's important for people to understand that the incentive structure here is very clear. In the same way that the horse has been the dominant form, or was the dominant form of transportation for millennia, until suddenly the locomotive just took it over the course of just under a century or so. In the same way, it's the reality here that our current paradigm, our current system of currency has a certain incentive structure, and Bitcoin is a new form of incentive structure. And when you understand that one incentive structure is better than the other incentive structure, you understand the inevitability of it. And so our current incentive structure with fiat currency is to create more debt forever, and therefore have a more and more unstable system perpetually. And since Bitcoin is fully reserved, since Bitcoin doesn't require debt to operate, it's an entirely different set of incentive structures. And people often say, oh, well, the government will never allow Bitcoin. The government will never let Bitcoin survive. I get this comment all the time. And this statement by Kennedy, as well as the North Carolina bill, as well as El Salvador, as well as the other nations that are looking to add Bitcoin as legal tender, this proves the point wrong. It's the same thing as saying that the horse breeders and the stagecoach companies will never allow cars to explode or take over. It's the same thing. It's that, yeah, they'll resist it for as long as they can until their incentive structure requires them to adopt it. You know, a nation cannot survive, militarily speaking, on horseback. They have to incentivize the adoption of the locomotive. And likewise, with the internet, let's say, I'm recording this on a computer right now, going to upload to the internet. 30 years ago, this would have been unbelievable. But we're here because of incentive structures. Radio and traditional cable television were the dominant forms of media, and they resisted the internet for a long time. People thought the internet was a fad. They thought it was a fraud. They thought it was just a bunch of hype, and people ignored it until suddenly they couldn't. A newspaper company had to start allocating resources to this internet thing in their marketing budget and in their expenses, because they had to have an allocation towards the future, just in case that future innovation displaces their current business model. And with currencies, it's the same exact thing, that we have this new form of money, and nations have to consider the possibility of what if this displaces our current paradigm? Who's going to want to trust a mixed basket of fiat currencies that all require debt to survive in the future, that are all fractional reserve systems, where now you have this competing currency, this fully reserved system. People are going to want an allocation to that. They're going to want an allocation to both fractional reserve basket as well as the fully reserve system. And as nations begin to realize that, they will adopt it. And in doing that, they escalate the rate of their own demise. And I'll get more to that in just one second. But what specifically are we talking about here? Well, we're talking about 1.88 million coins left on exchange. Let's see if I can get this visual. There we go. So this visual here, in this red line you see is Bitcoin's price since its beginning. This is on a logarithmic scale, so some of you may not be aware of that, but most people are used to looking at a linear scale. This is a logarithmic scale for Bitcoin's price. You see 4 clear cycles aligning with the halving as well as liquidity cycles, and that large orange blob at the bottom of the chart here is the available supply for trade Bitcoin. And we can see clearly that that peaked in 2020, specifically the spring of 2020 here, and now it's been trending down. And so similarly, this is a similar chart here. We have the balance of Bitcoins available on exchanges. We see this exploded in 2014 when the first Bitcoin exchanges were becoming available, widely massive. Actually, this is specifically Coinbase, excuse me. Specifically Coinbase we're looking at, but this is true for all the other exchanges listed there, Binance, Bitfinex, and all the others. We see a clear peak in 2020 or so, and since then, coins have been collapsing. The amount of remaining coins has been collapsing, and at this current rate, with current demand, it would just be mere years until they would theoretically at least be all gone. And that's before these ETFs get passed. That's before we're talking about Kennedy's announcement here. That's before we're talking about everything else. So supply is dwindling, demand is staying constant. And from the institutional side, from the sovereign side, and from the private side of individuals, demand seems to be going up. So if supply is going down and demand is going up, what should theoretically happen? To me, it seems pretty obvious what should happen here over time. And what exactly could that look like? Well, like I said, Kennedy mentioned 1% of Treasury bills. Now, at the time of recording, there's roughly $24.9 trillion in Treasury bills here in the United States. And so 1% of that would be roughly $250 billion, or $250 billion. And with 1.88 million Bitcoin on exchanges, if you divide that out, that's 133,000 US dollars per Bitcoin. And I really want that to sink in. Okay. Today, at the time of recording, we just had for the first time a significant presidential US candidate on video say that he would strongly consider and have it be a policy of his to consider having a misback where 1% of treasuries or 1% of issued treasuries would be backed by Bitcoin. Okay, we're talking 6 figures per Bitcoin just with that. But that's not really how markets work, because that's if all of the 1.88 million are bought. Okay, what happens to BlackRock then? They have 8.6 trillion in assets under management. What happens when they want 1% allocation along with the United States? What's 1% of 8.6 trillion? That would be $80 billion. That's also significant. What happens in China? What's a 1% allocation? What happens when Russia wants a 1% allocation? Russia has a strong incentive. It's why Vladimir Putin completely reversed course. He was strongly anti-Bitcoin in the same way that BlackRock's CEO Larry Fink was strongly against Bitcoin. And they both have changed their tune in the last couple of years here. Vladimir Putin, I believe, did it because of the conflict in Ukraine and because he was cut out of SWIFT. He needed an alternate. He needed a neutral monetary playing field. And Larry Fink, I think, sees the money to be made. And I think he sees that his clients are demanding this asset. And so really when that starts to sink in, it's hard to overstate the significance of that a presidential candidate just basically said he wants to do that. And if he did that, Bitcoin would go to 6 figures. And that's just the first percent. What happens if we want 5% of US Treasuries to be backed by Bitcoin? Okay, what happens if we want 5% and then a competing nation wants 6% backed? Because again, it's just incentive structure. It's just a feedback loop. Why would you have only 5% of your debt backed by the hardest asset known to man when your competing nation is out competing you? It's the same thing with what happened in North Carolina here with their bill. North Carolina wants to outcompete other states because they have an opportunity. California, New York, and other states, Illinois, are being mismanaged, and people are leaving those states and they're going to other states like Texas, like Florida, like North and South Carolina. And so those states have the incentive to consider anything possible to bring people to their state. And if they can back their treasury in a better form of money that's going to preserve its purchasing power over time, they can have lower tax rates. They can afford more public spending. They can do more to incentivize people to go there. And it's the same thing with El Salvador. I was in Guatemala this February, and everyone I talked to said that El Salvador is like the shining beacon of the region. It's like Bukele is not dumb. He knows what he's doing. He's not buying Bitcoin just for the heck of it. He's buying Bitcoin because he wants El Salvador to be the place people go to live. He wants it to be the safer place. He wants to be the more prosperous place. He wants to bring people in. And so it's the same thing here. It's simply feedback loop um, escalating on itself. And so let's think that through. 24.9 trillion, 1%, that's 250 billion. If that were to chase the remaining Bitcoin exchanges, that would easily be 133,000 US dollars per coin. And for context, Michael Saylor, who has become one of the most famous or infamous Bitcoin advocates out there, his Bitcoin position right now is 4.6 billion. So this proposal by Robert Kennedy this evening, alone is 54 times larger than Michael Saylor's entire position. Okay. it's a really big deal. And so what happens when we go from 1% to 2% treasury allocation? What happens when we print more currency into the future? Okay, keep in mind, we have $500,000 of unfunded liabilities added to our debt burden here in the United States every single second. That's $30 million a minute, billions of dollars every single day, roughly $56 billion every 33 hours. And there's 1.8 million Bitcoin on exchanges. $56 billion is the total value of those Bitcoins. So really, there is no limit to how much currency, how much economic productivity is going to be chasing Bitcoin, because there's a continually smaller and smaller amount of them available, not just because they're being drained from exchanges, but because issuance is going down and because more and more people have conviction in holding them. So, sorry, I got in a little rant there. Where was I going with that? Oh, and that, what people have trouble understanding about it is that the innovation is digital scarcity and absolute digital scarcity. See, up to this point in history, for all of human history, in the same way with the horse, we have only known one form of transportation. In the same way, we only know one form of preserving purchasing power. And the only way we know to do that is via man-made regulation, artificially cap certain things to be relatively scarce. Because we're very good at producing food, we're very good at building houses, we're very good at finding oil, we're very good at making stuff. You know, it's the nature of a free market. We produce more stuff for cheaper, faster, better. It's the nature of capitalism that everyone is incentivized to provide more value to their neighbor and get something in exchange that they desire. And so because we're very good at that, the best way for humans to preserve purchasing power is to create some sort of numerical system and artificially cap that. So take the US dollar as an example. We create a series of numbers and we have a board of politicians and government officials and lobbyists and lawyers that artificially cap the supply of that currency, which then gives it value because it's more scarce in relation to everything else. Your currency is more scarce than your house. Your currency is more scarce than your phone. Your currency is more scarce than all these things. And so when it's more scarce, the cost of those things, when it is more scarce, the cost of everything else goes up. Or no, I have that backwards. I'm sorry, it's late. When the currency is scarce, we have more and more assets priced in terms of the currency. And when the currency is abundant, we have fewer and fewer assets priced into that. So let's take stocks, for example. Stocks also are scarce by man-made, by regulations. And because it's scarce, it's getting more expensive in terms of everything else. And so that's why over time the stock market goes up. For example, here, this is something actually I tweeted just this morning of the time of recording, is the S&P 500. So the S&P 500 is the stock market here in the US, or at least it's what most people think of when they think of the stock market. And a funny little coincidence here is that from 1980 to 2023, the S&P 500 increased by a factor of 32x, from 140 to 4,500. And the national debt of the United States also increased by a 32x, from 1 trillion to 32 trillion. And if you look at this chart here, it's clearly parabolic. and if you zoom into the 1950s, 1940s, 1980s, it's a very similar chart. It's been continually parabolic perpetually. And the reason why that's happening is because our currency is regulated less strictly than the stocks in the stock market, because the American government has an incentive to produce more currency. because when we produce currency, we acquire assets in exchange for that. We can acquire more scarce things in exchange for producing the less scarce thing. The US government can acquire oil by printing money, giving it to other countries, and essentially taking their oil at a margin of that being outright theft. it's and that's the downfall. That's the downfall of up to this point in human history, what we've had. That are forms of currency, or forms of housing regulation, or form of stock markets, of bonds, everything else. All these things have a supply cap that is elastic, depending on policy, depending on human incentives. And so as the price of something goes up, humans have the incentive to produce more of it. As the price of a house goes up, we're incentivized to produce more houses. As we have more and more technological monopolies and more companies, we have more places to spread out our capital towards, and more places of cash flow to collect that yield. And governments produce more bonds, they produce more debt in order to raise more money to fund more of what they want. So we produce more of these things as the value of them goes up. And so that's worked for a while up to this point in human history, albeit at a large cost, because it creates inefficiency, it creates distortions in everything, because we don't have an accurate measure for measuring anything. A good metaphor is, if I was trying to build a ship and it was in terms of cubits, say the length of your arm, and you gave me the instruction to build a boat, let's say 20 cubits long, my incentive is to go out and find the builders with the shortest arms possible, because then I can build you the ship that is the smallest possible. So it's the lowest cost to me. Essentially, I'm stealing from you to a certain degree. It's the same thing today. Governments, politicians, corporatists, lobbyists, it's that's the distortion, that's manipulation. And so the innovation is, what if we were to find a way that we could create some sort of scarcity that was outside of human control? And that's what we're looking at with Bitcoin. When you think of Bitcoin, you can simply think of a digital scarcity network, and that's the innovation. That no matter how many bonds the US government wants to issue, no matter how many treasury bills, no matter how many political currency units, no matter how much stock people want to issue from their companies, no matter how much value I produce or how much energy and productivity I bring to the world, that all can be priced into that form of digital scarcity. And digital scarcity is better than analog scarcity, because analog scarcity is relatively scarce. If you have oil and gold, they're relatively scarce to each other. And if the exchange rate flows to oil or to gold, like a pendulum, vice versa, then the capital is going to reallocate, the incentives will realign, humans will produce more supply of the one that needs to be produced, and prices will reach their equilibrium again. But with Bitcoin, it's the opposite. And that's why it's so important for people to get off zero and to understand that Bitcoin is a different beast. And we've not seen anything like it before, because we've never seen absolute scarcity. We've only seen relative scarcity, in the same way that you've only seen biological transportation via the horse and muscles and their hooves and them running. You cannot understand the power of a locomotive, the speed of the locomotive, and how the locomotive can move 100 times the material at a tenth the cost for 10 times the speed, 10 times faster. It's simply incomprehensible. And it seems like a magic. It's kind of the same thing with Bitcoin here. And that's why when I threw out these large numbers of $1 million per Bitcoin, $10 million per Bitcoin, or $100 million per Bitcoin, it's not nearly as absurd as it sounds. All it takes are a few politicians and a few governments and a few more CEOs to start buying this thing and start hoarding these coins. And price will continually go up, theoretically, indefinitely. And people say it's a bad thing. That, oh, even Kennedy in his video, he said that, oh, it's a bad thing. People are going to be hoarding these coins. And I would disagree. Because if we do not have a form of digital scarcity to hoard, then we are forced to hoard things with relative scarcity. When we don't have digital scarcity to preserve our purchasing power, we are forced to hoard houses off the market and artificially make housing more expensive for people. We are forced to make energy artificially more expensive to people. We are forced to make everything else artificially more expensive for individuals, because we don't have a way to hoard everything else. If you cannot hoard money, you have to hoard assets and things people need to live. And so I would argue it's a better thing for people to hoard Bitcoin and to hoard that digital scarcity. So anyway, that's just my perspective and the perspective of Bitcoiners. And I think over time, people are going to realize this more and more here. I think a good example is, ironically, I don't talk about this really, but my grandfather worked at AT&T for decades, and he loved AT&T stock. He held AT&T stock. When I inherited some money from him when he passed, a lot of it was AT&T stock, and I sold it, thankfully. And that's no disrespect to him, but reason being, the AT&T stock is significantly down. In fact, I believe it just reached a new 31-year low in terms of the US dollar, and the US dollar has lost a significant amount of its value over the last 31 years. And so over time, people are going to continue to ask themselves, why am I going to trust these forms of relative scarcity? Why would I buy AT&T stock? AT&T is a company. They have debts. They could go bankrupt. They have a CEO. They have managers. They have a business plan. They have dozens of different risks that Bitcoin does not have. And so why would I gamble my money in these forms of relative scarcity when I could just buy absolute scarcity that is the most secure network on the planet? And this is a technological adoption curve we're looking at, this white line. You can look at other network effects in the past. It's simply the value of a network going from 0 to 1, and then from 1 to being everything, to being the dominant form. In the same way that the internet went from nothing to something very quickly, stayed relatively in the shadows for a very long time, and then suddenly has overtaken everything here. It's very likely going to be a similar thing with Bitcoin. That white line is the S curve that we're looking at. The orange line is the price of Bitcoin. Again, a logarithmic scale. So think in terms of 1, 10, 100, 1,000 instead of 1, 2, 3. And we see a clear trend where it seems to be going along the same way. And this is why it's important for us to overlook our unit bias. A 3 million Bitcoin is a 100x from at the time of recording when Bitcoin's only 30,000 US dollars per coin. And that's the red arrow pointing at there. And I show this chart again in context with the news from Kennedy. It is entirely possible, okay? It is entirely possible that it's entirely possible if Kennedy were to be president and if this policy were to be passed, Bitcoin could go to $3 million, $5 million, $10 million, and 90%, 95%, maybe even 98% of the general population has not yet bought any Bitcoin. That's entirely possible. And if you don't believe me, just look back in history. Okay, Bitcoin was 6 cents, and that was $1, that was $10, and that was $100 and $1,000. Okay, Bitcoin's gone up by a factor of 10, 100, thousands, and tens of thousands in the last 15 years. And at any point, I'm sure if you ask the majority of holders of Bitcoin, do you think it would go to that high of a price that quickly? I think the majority of them would have said, yeah, no way that's going to happen. And now that I'm in Bitcoin, now that I'm buying Bitcoin, I feel it for myself. Like I said, I was very surprised at the speed at which Saylor adopted it. I was very surprised at the speed of El Salvador. And now I'm very surprised that we have a presidential candidate actively saying this, because it's not just about Kennedy. And I really want to emphasize that. All the other presidential candidates have heard him say this. All the other candidates and all the other politicians of all the other nations have heard him say this. And even if they don't think about it now, even if they think he's crazy now, the idea is now out there. And so even if Kennedy doesn't win, even if Kennedy doesn't take it up, I think the odds of someone else taking it up significantly is probably not. It's a little higher from 0, let's say. It's become a little more likely. And so where are we going from here? What's the long-term view of the price of Bitcoin? Well, this is another tweet of mine here. We're looking at Lebanon, and we're looking at Lebanon and Turkey and Argentina. I forget the fourth one here, but all these nations, their currencies are at lower exchange or at higher exchange rates to Bitcoin compared to here in the United States. And why is that? It's because all of their currencies, all of their political currency systems have that relative scarcity. And the value of digital scarcity, absolute scarcity, priced in terms of relative scarcity, is going up quicker to us. Everything is simply an exchange rate. You have houses to US dollars. You have oil to the S&P 500. You have Bitcoin to silver. Everything is an exchange rate. And in those countries, their currencies are deteriorating faster than the US dollar. And if you're watching this and you are in one of those nations, I would strongly, strongly, strongly encourage you to consider buying Bitcoin and to consider buying it as quickly as possible. Because if you're in one of those nations, they are probably going to do the same thing. And they can move much faster than us here in the United States. We're a much larger economy. We have a much larger government. It'll take a long time for us to move that large amount of capital. Granted, once we do start moving, we'll have an advantage over every other nation on the face of the planet. But your nations can move much quicker. If I were in charge, if I were a politician of one of these nations with a rapidly deteriorating fiat currency, what is my incentive to do? Is to adopt this new arms race, to adopt this new space race. And basically, as the Sailor quote goes, take all of the money and buy Bitcoin. They take all the time and figure out how to borrow more money to buy more Bitcoin. If I'm one of these nations, I'm going to take our treasury, acquire Bitcoin to back our currency. And even though we just printed more currency to acquire the Bitcoin, thus making our currency weaker, the net gain in acquiring that Bitcoin and acquiring the absolute scarcity radically offsets the reduction and the dilution and the debasement of our relative scarcity. And that's the feedback loop. It's essentially a giant game of musical chairs. And as my tweet here says, millions will wake up one day and realize that their entire retirement portfolios are sitting in political currency units, sovereign promises, aka bonds, corporate paper, aka stocks, and propped up property equity. Okay, we're talking about political currency. The only thing that prevents us from creating more political currency are governments. The only thing that prevents us from creating more debt are governments. The only thing preventing us from creating more stock and issuing more shares are the CEOs and the boards and the governments and the regulations that oversee those companies and the political jurisdictions those companies are in. And likewise, property equity. Why do you think we have a massive housing shortage? It's because our regulations and our red tape are artificially reducing the supply of new housing out of the market. We are artificially propping house prices up. And if we had a free market, if we had a free form of money, housing costs would go down. And in terms of Bitcoin, housing costs are already going down. All of these things, people one day are going to wake up and realize is just made up. Their scarcity is relative in relation to each other and it's completely made up. It's all hot air. And when they realize that, there's no going back. And they'll start smash buying money. They don't care what price you're buying at. Okay. Michael Saylor in 2013, when he was ignoring Bitcoin, he could have bought Bitcoin at $100. He could have bought it at $1,000. But Michael Saylor is buying Bitcoin now at $30,000, billions of dollars of Bitcoin. I believe their cost average now is 24, 25,000, in the mid 20,000s of dollars. So he is paying 25x more than he could have in 2013, years later. And he doesn't regret it because, as Michael Saylor said, Bitcoin's going to $5 million. And then after that, it's going up forever, Laura. So millions of people are going to realize that. It seems to me that Kennedy may not fully realize that yet, but he's understanding it more and more than other politicians. And I think that's really significant. And it's one of the questions I get is why don't people realize this yet? And it's simply because they aren't looking. They aren't thinking. This is a gif from the movie The Big Short of the 2008 subprime housing crisis. And why did very few people see it coming? It's simply because they weren't looking. Everyone assumed the system as it was going to continue to survive without any outside influence, was going to continue to survive, all systems normal, and they completely ignored it until suddenly the inevitable happened. And likewise, I believe most funds, most billionaires, most wealth managers, most financial advisors, and most governments and politicians simply have not done their due diligence on this asset. And the reason I believe that is because many of them give factually incorrect statements. This article here had factually incorrect statements, and it's from Bloomberg. It was simply embarrassing. But anyway, the majority of these people don't know. And the fact that BlackRock, the fact that Kennedy, the fact that North Carolina, the fact that all these things are starting to move tells me that they want to learn and they want to know. And I know it from my own personal experience, and I know in seeing other people and their personal experiences that once they adopt Bitcoin, that their whole allocation strategy changes incredibly rapidly. And so that's my concern. What if this is ending up to be a major catalyst that gets people start thinking? You know, again, Kennedy doesn't have to win. If he just gets people start thinking, that's a really big deal. That's a really significant piece of the puzzle that's occurring here. And so here's a funny little thought experiment. Again, there's 1.8 million Bitcoin left on exchanges. If 20 million people tried to buy a tenth of the Bitcoin, they couldn't. They simply couldn't. Granted, some people would sell. Obviously, the market would reach some sort of equilibrium. There would be volatility, obviously. I know that, people. But theoretically speaking, not even 20 million people could buy a tenth of the Bitcoin. And again, forget BlackRock. Forget all the ETFs. Forget all the nations like the United States or like China that will take a 1%, 3%, 5% allocation of backing their treasuries with Bitcoin. Think about all the billionaires. Think about all the companies. Okay, think about Apple. Apple's got tens of billions of dollars in their balance sheet. So does Tesla. So does Amazon. So do other tech conglomerates out there. There are trillions, hundreds of trillions of dollars of assets and money just sitting out there waiting to be liquidated for the superior asset, waiting to be liquidated for the apex predator money, waiting to be liquidated, having these relative forms of scarcity liquidated for this absolute form of scarcity. And so that's my encouragement for people today, is that you don't have to buy a lot. You don't have to go all in the same way that Kennedy is not being so radical as saying that we have to have 100% of our treasuries backed by Bitcoin, just 1%. Okay. In the same way that Kennedy is being pragmatic and thinking we need to preserve the American dollar as much as we can. We need to preserve American interests as much as we can. And therefore, we should take a 1% allocation to this thing. It's the same thing for every person and for every company and for every government. That it's in our own self-interest to acquire Bitcoin. And ironically, as we do that, we make everything else less valuable. Me personally, when I sold my stocks, when I sell my cash, when I sell my bonds, and I acquire Bitcoin, I make all those other things and my remaining exposure to them worth less. And yet it's still justifiable to buy the Bitcoin. This is why I often call it fire insurance. Okay. Buying Bitcoin is like buying fire insurance on your house that's already burning down. And as you buy that fire insurance, you're pouring gasoline onto your fire. And that's what, and people, I like that metaphor, because when people hear about Bitcoin trying to say, like, why would I pour gasoline on my house? It's because you are buying the fire insurance for it. Why would the US government buy Bitcoin? That undermines the US dollar, and that would collapse America as we know it and the American economy, blah, blah, blah. People, it's not, the Bitcoiners are not predicting the collapse of the United States of America. We're predicting the debasement and the decline of the US dollar. Okay. And we are so brainwashed. We are so brainwashed by mistruths and manipulation that we think that the credit markets are synonymous with the US economy. And they simply aren't. They aren't. Everything has been propped up for decades via cheap money, via lower and lower interest rates, via fiat, because we want to distort things, because we want to believe the lie we can get something for true at the expense of tomorrow. And so we're not predicting the end of the economy. We're predicting the end of this credit distortion, because that's an inevitable result of various forms of relative scarcity that are managed by human beings. And that's the exciting thing to me, is that now we have a presidential candidate, even though I disagree with him on many things, both politically and morally. We have a presidential candidate that understands that to a certain degree, that we have to protect ourselves. We have to buy that fire insurance. And so I would encourage you, anyone listening, especially if you're in the developing world, please just get off zero and buy some of that fire insurance, just in case the crazy people like me are right and the house is already burning down, and that it's only going to continue burning down at an exponential rate. Or perhaps a different metaphor than fire would be water. Most of the people on the Titanic did not want to accept that the Titanic was sinking. And why was that the case? Well, we're really bad exponential thinking. They thought the ship is so big, it's not going to sink. And even if it were going to sink, it would take so long that help would be here just in time to save us. But that's not what happened. Many of the lifeboats that left the Titanic were half empty because people didn't want to get on them, because they preferred the safety of their iron ship. Why would I get in a flimsy wooden boat in the middle of the freezing cold Atlantic when I could just stay on this massive ship, even though it's sinking and the water level's coming up? It's not coming up that fast. Again, you have to think in exponential terms, okay? If we have a major nation, especially the United States, start acquiring Bitcoin to protect its own balance sheet, to protect its own treasuries, do you not think every other nation is going to follow suit? Do you not think that we're not going to stop at a 1% allocation? No, that is endgame territory. And that's why I've said continually now, my entire time being online talking about Bitcoin, is that, please, people, everyone is going to realize this, that you take all your money, you buy Bitcoin, and you figure out how to take your time to borrow more money to buy more Bitcoin. And the only institutions on the face of the planet that can manipulate that relative scarcity infinitely upwards and create infinite currency are governments. Okay, if you are a company or you're an individual, yes, you can sell assets and you can sell your political currency units for Bitcoin, but you do not have an infinite currency printer like the United States or like China or Japan or the EU. Okay, we have to work for our Bitcoin allocation. These nations and companies and connected institutions are going to be able to manifest their Bitcoin allocation. Granted, it'll be a perpetually smaller allocation forever as what they are printing into existence becomes worth less and less and less. But please, if you're in the developing world, especially, but anyone watching, please get off zero, because it's going to become exponentially harder because you're going to be competing against exponentially more people. You'll be competing against every entrepreneur that is producing as much valuable assets, goods, and services as possible to acquire as much Bitcoin. You'll be competing against all the institutions acquiring over the smaller and smaller number of Bitcoins available. You'll be competing against all the governments creating an infinite amount of currency. Okay, this is a space race that everyone can participate in and everyone's going to be competing for. And that's the beauty of Bitcoin, is that it aligns incentives in this way, that it creates a sort of global competition where everyone's competing for the smaller and smaller and smaller remaining amount of Bitcoins. And because it's infinitely divisible, that competition theoretically could go on forever. And so I'll conclude with this here. Again, you don't have to get all in. You just have to take a small allocation and get off zero, okay? This table here is one of my, in fact, I think it's still my most viewed piece of work I put online, where basically I do the math. And if we take current rankings, let's say, of entities, we have nations and mega rich all the way down to those in the lower class in poverty. And we take a generic Pareto distribution based on current wealth distribution, and we plot that out. This is what we have. Now, many people think that Bitcoin actually makes wealth inequality worse. This is a topic for another time. Actually, it's not as bad, but this just gives some sort of idea what people should perhaps strive for. Okay, a mere 10,000 sats, okay, or 1.5 million sats, or a couple million more sats than that. Okay, as many as you can. That's the goal. So please, if please just get off zero, people. It is exciting. It's very exciting to me, and it's also sometimes slightly terrifying because people do not realize how quickly this could occur. It could happen fast, and I think Kennedy's comments today are very telling. Okay, people think, oh, the government will never allow Bitcoin. It's like, no, the government will expedite the destruction of the currency to acquire Bitcoin in the same way that nations of the past expedited the technological obsolescence of their cavalries in favor of the locomotive. We'll do the same thing here with money. So please, people, get off zero.